Hi, and welcome to Tax Tips for Lawyers. My name is Jessica Chisholm, and I'm from Huddleston Tax CPAs. Attorneys are held to a certain set of standards in their conduct. How lawyers practice their profession varies considerably. Some are employed by large corporations, such as government agencies or corporations, and a large number of lawyers are self-employed, operating as sole proprietors, alone, or in shared expense arrangements. Other lawyers are partners or shareholders in large law firms. For most lawyers, the practice of law is a business enterprise. So today we're going to talk about choice of entity, effects of the choice of entity on federal taxes, different tax deductions for lawyers, and other tax and accounting issues. So first, when you start your business, you want to choose your entity. There's sole proprietorship, partnership, professional service corporation, single member PLLCs, and multi-member PLLCs. Sole proprietorships are just you get a business license from the state, you report your business income on the Schedule C of your Form 1040, and your net profits are subject to 15.3% of self-employment tax. A partnership is when there's two or more owners sharing in the profits and loss of the business. Partnership files its own tax return, but it is a flow-through entity, so there's no tax at the partnership level. Partners get K-1s and they report the income on their 1040s. Professional service corporation can be taxed as a C corporation or an S corporation. C corporations are what people talk about when they talk about double taxation, files its own tax return, pays tax at the corporate level, and again on dividends that are issued to shareholders. An S corporation is a flow-through entity, no double taxation, files its own tax return, but there's no tax at the corporate level. Owners get K-1s, just like in a partnership, and pay the tax on their 1040. S corporation owners are required to pay themselves a reasonable wage, and then whatever net income is left over after that, you can take as distributions and is not subject to self-employment tax. Single member PLLCs are taxed as a sole proprietorship if no election is made. You can elect to be taxed as an S corporation or a C corporation. Multi-member PLLCs are taxed as partnerships if no election is made, but can also elect to be taxed as S corporations or C corporations. The effect of your choice on federal varies. For income tax and payroll and self-employment tax, self-employed Schedule C and file Schedule C and Schedule SE, that's the self-employment tax, on your Form 1040. Partnerships file Form 1065, that flows through then onto your Schedule E on your 1040. S corporations file Form 1120S, that flows through to Schedule E on your 1040. C corporations file Form 1120. They are subject to corporate tax rates. There's double taxation on the dividends, and they're personal service corporations. There's the home office deduction that you can take. The requirements for a home office are that it's exclusively used for business and that it's your primary place of business or a place you meet clients or a place where you store inventory. The different entities can deduct the home office in different ways. Sole proprietors just deduct it against their Schedule C income. S corporations either need to deduct it as part of an accountable plan or as a miscellaneous itemized deduction on their 1040. Partnerships can use it as an unreimbursed partnership expense to offset their income on Schedule E. Selecting your year end for your business, if you're self-employed, so Schedule C, you have to report on a calendar year because that's the same as your 1040. S corporations are most often calendar years, although you can elect to have a fiscal year end. C corporations can elect a fiscal year end and are able to shift income between the taxable years. Partnerships must use the tax year of the partner who owns 50% or more of the interest in profits and loss, or profits and capital. If there's no majority interest partner, then you must use the tax year of all principal partners with 5% or more interest. So most often it's going to be on a calendar year. Medical insurance and medical reimbursement plans. If you're self-employed, you can deduct your medical insurance if you pay it as a plan separate from a W-2 wage on page 1 of Form 1040. Other medical expenses, like out-of-pocket expenses, are deducted on Schedule A of the 1040. S corporations can deduct medical insurance for the owners if all eligible employees are covered by a group plan. So more than 2% shareholders must have their premiums included in box 1 of their W-2, and then they deduct it on their 1040 again. C corporations are able to have a medical reimbursement plan. Charitable contributions for businesses. Self-employed people report them just like everyone else on Schedule A of their 1040. S corporations that pay it, that then flows through onto Schedule A of the 1040. And C corporations deducted directly on Form 1120S. Entertainment expenses are no longer deductible with the 2018 tax legislation. Travel expenses must comply with the substantiation requirements. So you need to keep records of when you travel. Books, periodicals, and software that you purchase for business. The cost of books and subscription services with a useful life of more than 1 year is depreciable over 5 years. Software is not depreciable property, but it can be subject, it's not depreciable property subject to bonus depreciation. Software has to be amortized over 3 years. However, ongoing software subscriptions are deducted as they're incurred. Books, subscription services, and software purchased on an annual basis having useful life of 1 year or less are deductible in the current year. So bonus depreciation in the Section 179. Bonus depreciation for 2018 has been up to 100%, and can be new or used assets. Prior to 2018, it was only 50% on new assets. Section 179 now has a $1 million limit. So choosing your accounting method, cash versus accrual, you choose that when you first start the business. It can be changed later down the road, but there are a lot of forms and calculations required by the IRS to change. Cash, you declare income and expenses as you receive them or incur them. Accrual method, you recognize income as when you invoice it, and you recognize expenses when you receive those invoices. So for advance payment of services, when is it required to be included in income? For retainers, specific and annual retainers under the cash basis of accounting are taxable when received. For constructive receipt of income under the cash basis of accounting, income constructively received if subject to demand and no substantial limitations or conditions. For record keeping, you want to keep good books. Keep your appointment book, cash receipts journal, cash disbursements journal, accounts receivable journal, individual client accounts, case time records, register of cases in process, and time summary reports. You want to keep all of that current so that you know the current standing of your business. You need to have a record retention policy. For computer software, it would be a good idea to have QuickBooks to track your income and expenses, to have good time and billing software to keep track of everything. Then it's easiest for tax purposes and if you're audited to just really show that you have good records. For client trust funds, used for all funds and assets received or held by a lawyer for the benefit of the client. So there's 2 types of trust accounts, general trust accounts and segregated trust accounts. You need to maintain accurate records and prepare your bank reconciliation every month. And you can use QuickBooks for trust accounting. Client-related expenses, advance costs and other expenses on behalf of the client with expectation of reimbursement. Record as asset, unbilled advance client costs. Costs paid on behalf of the clients that are to be treated as loans for tax purposes, not currently deductible. Exceptions for costs allocable to normal operating expenses expected to be incurred regardless. A bad debt deduction to be taken in any year, any costs determined to be uncollectible. So that's going to be on accrual basis only. There's no bad debt deduction on the cash basis. And advances to clients for living expenses or other expenses normally paid by the client. So Form 1099 reporting requirements. So anytime you make a payment to another person for $600 or more, you may be subject to issuing them a 1099. 1099s don't have to be issued to corporations, companies that are incorporated, but they do need to be issued to all lawyers, even if they are incorporated. And then you also need to do 1099s for payments to recipients of lawsuit settlements or awards unless they're exempt from tax. A lot of people talk about employees versus independent contractor issues. So you really need to think about whether the person working for you should be classified as an employee or an independent contractor. Independent contractors will get those 1099s. Employees get W-2s. So if they're doing they're working for you full-time, using your office, your computer equipment, subject to your rules, that's going to be an employee. If it's someone who has their own business license, their own business, they work part-time for you, they're supplying their own computer, their own place to work, then they're potentially an independent contractor. So you need to make sure that you're classifying everyone correctly. That's all I have today. If you have any questions about what you've seen, feel free to contact us at Huddleston Tax CPAs at our contact information below. Thank you for attending.